He's VTB Capital's global macro strategist, Neil MacKinnon. Neil, thank you so much for coming in. It was very interesting listening to actually Mervyn King's speech yesterday, saying that this really has to do with what's going on in Europe. Sometimes in the UK we feel like we're immune to the debt crisis, but it's because of that recovery not taking hold that he suggested that rates will stay on at this level for longer?
Absolutely, and I think he's right. Certainly the UK economy is not immune from what's going on in the Eurozone debt and banking crisis, given the role of our own banks globally, and of course the trade links, major trade links that we have with many Eurozone economies. So even though we have the opt-out for monetary union, we're not immune from the downside risks, and that goes for the global economy generally, by the way, but certainly in the UK economy we're not immune from the downside risks, and that's why I think Mervyn King is right to send out a rather bleak warning for the short to medium term. And I think it's why it's certainly right to believe that interest rates here in the UK are going to remain low for a fairly extended period. Is
the Bank of England almost more on top of this crisis than the ECB? I remember, that last time there were two conferences on at the same time. It was decision day for both, and actually the Bank of England was more aggressive with the bond purchases than the ECB was by far.
Well, I think one of the criticisms that's being levelled at the ECB, and certainly when they come to write the history books on the existing crisis, is that the interest rate increases that we've seen from the European Central Bank earlier this year do seem to be a mistake, and it's not the first time that they would have done that. You remember that back in 2008, the European Central Bank actually raised interest rates just a month, 2 months prior to the Lehman crisis. So there's no doubt that the Eurozone economies are suffering a deterioration. The lead economy, Germany, previously been going quite well. According to the Bundesbank, the outlook for the first quarter of next year is none too good. So certainly the Eurozone has got lots of problems. We're looking for a resolution to this debt and banking crisis. Whether we actually get one remains to be seen. But here in the UK, we've got our own problems. Economic growth is very soft, 1% at best. Unemployment is a key issue. The housing market is still very much in the doldrums.
Inflation, that figure of 5.2%, you really can't get away from that.
Well, what was interesting, and certainly I've got some sympathy with Mervyn King's viewpoint on all of this, is that while you wouldn't want to go too far and say that domestically generated inflation is absent, certainly a lot of the increases in the cost of living, as we all know, comes from higher oil prices, higher energy prices, higher food prices, all of which is out with the control of the Bank of England. You could put interest rates up to 20% this afternoon, but it would make no difference to the price of oil or the price of food or the cost of living. I think that governments should really step in, particularly with regards to the utility companies, and given
which they have in other European countries. France has taken very strong steps.
I would go as far as to say there's a strong case for actually nationalising the utility companies, because I think the impact on ordinary households that we see in all our utility bills is actually way too much, and having a very adverse effect on real incomes.